Good turnaround Tuesday, Warriors. How's everyone doing today? Tip of the hat to Kman. 150 meant nothing. Nice call. Nice call, Kman.
Yeah, I'm running a bit of an option. I didn't want to have too much cash in there. But as we've already mentioned, he's still going in a snail's pace. Ueda doesn't give the yen bulls too much to chew on yet. So I think that's rather what we've seen overnight now is that the yen bulls are disappointed. But we also wanted to highlight a bit of the risks because the move there is getting a little not excessive, but it's quite wide. So we perhaps may get ready for again some at least Ministry of Finance comments sooner rather than later. But yeah, I mean, Ueda was disappointing for the yen bulls. Yes, a tweak. Making the 1% in the 10-year JGBs rather a reference than a hard cap, but at the same time saying that they will continue to buy JGBs more flexibly, but I guess above 1% they will come in pretty heavily right now. There's a lot of discussions I see going on left, right, and center about whether this is a big step or not. I'd argue this is still a small step. They acknowledge the higher inflation, so we are still on the path to normalization, but Ueda still hasn't found the real accelerator, you know, to go faster.
Okay. Glaring divergence on the daily. So maybe we'll get that, what, 152 was a long-standing number for you?
Yeah, it was. It
Okay.
still is, and it's going to be a psychological level because that's where they intervened last.
Right.
So that is going to be for sure an area that we have to monitor. If they remain absent, some time back in 2022 or so, I showed a big triangle, a long-term triangle on the dollar yen, and with possible targets because it got broken in 2022 with possible targets around 156. That is still a level that I'm going to be watching very closely if ever we get there. Of course, that is. Because if the US yields start to come off, et cetera, it's probably not going to get there. But the worrying thing now for Japan and perhaps the MOF and also even the Bank of Japan and Japan Inc. is that not only dollar yen is going higher, but all the yen crosses are trading very, very big again. The yen trade weighted index is at all-time lows. It's lower, much lower actually than when they intervened November last year. So they may be looking at it, maybe not. Suzuki hasn't given us the hint or given us the green light to watch it either, last interventions, but it's very, very low. So I really wouldn't rule out that they intervene at some time.
Okay. I just wanted to show the Nikkei. I noticed this last week. Real important area if you look left. And of course, we broke out above it. And on the verge, I'm not saying they can't turn it here, of a breakout failure.
Yeah.
That's my new name for these instead of a failed breakout. It's a breakout failure. So I'd watch that. May have something to do with, it's not the greatest response. Normally, you see the Nikkei acting better with what's happening in the yen.
Yeah, it had a bounce as it came out.
Yeah.
We're still close like 0.6% up on the day, but
Yeah.
it's not
kind of anemic.
Yeah, it's not your big bounce, but the thing is making this 1% YCC flexible is probably going to mean that the market is going to test it. So if you couple it to the JGB yields, we could say that it's kind of logic that the Nikkei doesn't rebound more. I think we need to give it a little bit of time, perhaps.
Okay. I think I wouldn't, you could give it all the time you want, but I would sure wouldn't give it a close under this area.
Yeah,
Okay.
I mean, giving it a little bit of time. That's because I trade on a month end with a clock in my mind. So
Yeah.
um, let's see how the new month starts.
Oh yeah, that's not
That's
that
what I
far
mean.
away. Okay. Happy Halloween, everybody. So if you're not scared, I don't know what would scare you.
I
Yeah.
bought
Oh,
candy
there.
last night, Dale.
I heard they closed the Strait of Hormuz. Happy Halloween.
Happy Halloween.
All right. So continuation move here in Euro. Where does it stop?
At 4 p.m. London time.
Where, not when. Could this be it?
How do I know? What do I know? Yeah, it could be, but
Yeah.
then I think it took a lot of people by surprise. If you look at the divergence in the data across
Yeah.
the pond, it took a lot of people by surprise. Probably a bit of overpositioning as well. Euro crosses are also very, very big. And well, I'm still thinking it's month end. So let's see what happens a bit later and the start of tomorrow, the new month.
Okay. Well, it's been on both sides of this breakout, and we're underneath it now. So I don't know. Are we going to attack these lows, or, I guess it's time to start talking about no, not Bernanke. No, not Yellen. Let's talk about Jaybird. What do you think, guys? You, I read Welsh. No move, but hawkish presser.
FOMC?
Yeah,
Yeah, wow, hawkish. Yeah, it can be more hawkish than ECB, for instance, because the economy, the numbers that the data that we have got in October are all on the strong side. Even the housing market data came out a little bit on the stronger side this month. Um, yeah, I'm going for my base case is probably going to be neutral again and walking the fine line again. That's what Powell does usually, right?
and yields are down pretty good here, down 7 bips,
Yeah.
almost 8 bips. It looks like the Nikkei. We're at a major horizontal support level here.
Yeah, I
So
think we can have a big move there tomorrow when the U.S. Treasury is going to give us the details what they want to do with their refunding program, whether they're going to issue much more bills, what the market is expecting. So that's gonna should be weighing a little bit on the long end of the curve. Perhaps increase the inversion again a little bit, but it's open to saloon doors again. If they stick to what they did in the last quarter, then you're going to see those longer end yields ramp up again. But I mean, base case is that they're going to go more for bills, and that's what the market is
yeah, the
already
short
trading
end.
now and a bit of month end.
Yeah, yeah. Well, uh, the Fed, when it comes down to it, don't you think they want to do something to save the bond market?
Hmm.
Well, do you think they're more concerned about saving equities or saving the
It's
bond market?
well, it could be the same one. Huh? It could be the same one. If they save the bond market, they're probably going to save equities at the same time. But
Good
then
point.
equities need saving at this point?
Yeah. Well, let's get back to it. We did have a very sharp rally yesterday, and we talked about that. Some wave counts take it up to 43. That was the low. A lot of confluence at the breakdown at 42.05. Get above there, and I wouldn't be bearish for a while. Maybe shouldn't even be bearish now, but I have to give the 4,200 the benefit of the doubt for now. I'll probably say, you know, that might even be a great sell up there. And you know what? If we don't get there, that's a little bit more bearish. So, it
Mhm.
looks like this can be a layup to get up there, but maybe we don't. So, uh, you know,
Would
like I
actually
said, go ahead.
it'd be nice to get up there and then see what happens there for the
Yeah,
reaction.
yeah. So, yeah, you have 4 hour 50 there with the breakdown. And, you know, Canada is up today, right? But, you know, we had a little bit of a throw over, which we talked about Friday with Blake, and a nice little throw over. And now we're back inside of the wedge. But I mean, he hasn't given up the ghost. He could make another run.
We have
Um,
Canadian GDP today, so that's going to
okay.
be a mover. We'll drill into
You
those
still
charts
like
here in a
it
minute.
for you still like it for move to 140?
I do, as long as it stays above 138, and I'll
Okay.
show you the reasons why. When these guys
Okay.
give their updates. So
All right. So the weakness is back to Aussie. So you know, if you want to be bullish a dollar, this is probably the one, or long Canada, rather than, you know, trying to short the strength up here. BOE when? Tomorrow?
The day after tomorrow.
Okay. Nice little wick there. Maybe that's it. EG keeps rambling on. I remember Ryan and I were talking about it. I don't know, back down here, when it was making the lows. So that's saying, you know, your preferred short is cable, not euro. That's what this is saying.
Yeah.
So I think I've covered almost everything that, you know, I'm paying attention to. I could go over a couple of stocks. Apple is bouncing off this major support level, still playing with the 200. It's all going to come down to earnings. It's interesting. NVIDIA tried to come back and negate the this little neckline, but it really hasn't. And, you know, others recovered better. I mean, Amazon's still moving after its great earnings number. Microsoft is, you know, this was pretty vicious. And then you thought you had a breakdown, and here we are again. We'll see. Could be a failing rally there. And the VIX was turned away. I only have one comment on the VIX, and that's 23. 23 was last week's highs. On the weekly, it tagged the 200 week. So if you ever see the VIX over 23, I don't think you're going to want to be long stocks. And look at this. This one, it tagged the 50 month at 23. So it was rejected. I don't know, is it a bearish formation? Is it a bullish formation? I don't know. I really don't. So I just think that some of our adversaries, I know it's silly, probably don't want the West to have a great holiday season. So just keep that in mind. And that's it. Blake, all yours. Take it away. And
well, good morning. Well, I don't even think, did we
morning.
hear from Ryan? Ryan, are you here?
Oh my gosh, I
Yep.
forgot him.
How can you forget me?
Yeah, I mean, you totally
Yeah.
forgot about Ryan. I was listening to the Flow show this morning and a damn siren went off. What happened there, buddy?
Yeah, phone went.
Yeah, I mean, that was like something I've never heard before. I thought you were getting like an air raid over there or something. No,
Yeah,
one of the near-term benefits of this messed up time change that we are going through, as the United States hasn't gone through the time change, but everybody else has, is that one of the benefits is I get to listen to the tail end of the Flow show, which, you know, it's nice with my morning cup of coffee. So if you guys don't listen in, make sure you are listening in. And then all of a sudden you hear this air raid siren, and I thought it actually woke up my entire family over here, Ryan. So anyway, hey, real quick, I thought we would cover, and thanks Dale for the broad market overview, but I really want to dig into, the what happened with the BOJ, and I actually was short the euro yen, looking for this long-term double top, and yeah, I'd end up getting stopped out of this one when it broke above the 160 level. But you look around, and Kman, you said something funny, which I find humorous, but we should probably talk about, is that on Twitter or X, people are saying that the BOJ is wrong and this and that and the other thing. But the fact of the matter is if you were long yen, that was the wrong play. I mean, that's it, right? So,
Yeah,
I mean, people can complain all they want, but and I understand that the Nikkei newspaper or site or whatever, I don't think they use newspapers anymore, do they? But anyway, they kind of led the market down the road as to slaughter as the BOJ came in, and just they just underwhelmed the market. The market was expecting a wider band, didn't get it, and therefore the yen got sold. So what do you think? What do you guys think? And this is for both of you. What do you think happened here? And is the BOJ playing freaking chicken?
You want to go first, Ryan, or me?
Oh, yeah. No, you go ahead, mate. You go ahead.
No, I thought, Blake, you were going to bring up my comment about Ueda's legs.
Oh yeah, he can't drive the car. His legs are too short. Sorry, that was funny.
Yeah, he hasn't found the accelerator because his legs are too short. No, I mean that's exactly it. I think he underwhelmed again. This being said, he made the YCC flexible, and they recognize the higher inflation, so that leaves the door to the normalization open, which will probably happen. But it's going to happen a lot slower than what the market hopes or expects, and that's the message again today, which has pushed yen longs towards the exit. That really is about the main message. That is, it's going to be a lot slower. And then, as I said, it always brings me back to when on day 1 or 2 when Ueda got the job, where him as well as the government said that they were going to closely cooperate together, which is basically saying that they are going to fund the government needs, and that is what they are still doing. So I expect the JGB yields to test that 1%, and then we see what the Bank of Japan is doing. If they really step in and heavily defend it, then it's probably going to weigh on the yen again. It's still very, very hard to be long yen for longer with the Bank of Japan that doesn't let the leash off more than it does, right?
It is. I mean, I've been short this Kiwi yen for like a couple weeks, and this is my most aggressive position that I have on the board. And it's because of the long-term development of this multi-year trend line. But it's expensive. It's expensive to hold, and it's okay if I can make 400 or 500 pips on a move down to 81, 82 yen over time. It's like, okay, if I have to, if I spend 40 or 50 pips in carry costs, it's okay if I make a few hundred. But when, it's very, very frustrating for somebody like me who's been short this thing and I was, just up 100 and, whatever pips. And then it's like, whoop, and it's up in your face a little bit. It is frustrating. It's hard. It's hard to hold on to long yen positions for an extended period of time. Anyway, Ryan, what are you thinking here as far as the BOJ and what they're doing?
Yeah, it's another half shuffle step towards the exit door, without getting anyone too excited, and that's the way it's going to be. We're not suddenly going to get them turning around and saying, "Oh, tomorrow we're hiking rates by 25 pips." It's not going to happen. So you've got to wonder, if you want to be long yen, are you ever going to be right? Over the next, it might be 2 years before they normalise policy unless inflation really starts going up again and staying sticky. But price wise, we've broken the 150. We held it, give or take, at 150.05. So that gives you a little support nudge there, that the 150 level is probably going to be supportive now. The fact we haven't taken out the prior high around that 150.70s a bit concerning, because the intervention thing alone is a bit of a green light. No intervention from the Ministry of Finance in October, so that puts to bed that argument, unless of course they sent it out, their little minions, unofficially. So yeah, it's we were discussing on the flow show. It's tough to be long yen pairs, because if they didn't intervene before, it means the threat is still there. And it's tough to be short because they didn't intervene, and the Bank of Japan are going slowly still. So, how do you pick it? You pick your levels and, trade them very tightly. As you explained, you can be in a position well in the money and bang, you're knocked on the head.
Yep.
So you've got to keep your positions manageable and in control of them, and take profit when it's there, I think is the key story.
Yeah, it's a smash and grab. So channel resistance comes in around the 161% extension, which is going to come in close to that intervention level around 152. That seems to me logically where we're going. It's, take out the highs. Here we are into, channel resistance, 161% extension. This is just this is that spike lows when they checked rates. Whenever that was, I guess it was on the beginning of October. So it does seem that the 161% extension of that move is going to be the next viable target. So if you're upset about, everything that's happening here, you might end up getting more upset in the days ahead, especially as we go into month end. Speaking of which, we got month end coming up. But actually, before we talk about that, I do want to talk about the dollar CAD, because we got a nice head and shoulder pattern here. Dale, you asked me, how do I feel about the dollar Canadian?
Yeah.
And this is how I feel about it. You could look at it as a pennant, because it's consolidating in a breakout, territory, right?
Mm-hmm.
Being that we're in, above a, let's say, long-term, whoops, let me go over to the weekly chart. That's going to be our daily chart. So long-term channel, we broke out of it. That your 3 drive stopped it at the end of last week. I would attribute that to lack of major developments over the weekend, so we came under pressure. We have a triangle or a pennant developing. You can look at it like this, but you can also look at it like I just had it, that it could be a head and shoulder pattern. That means if we break below 138 today, it would be bearish. But I don't think you should look at it like that just yet, because we are, making a pivot off of these, the sport. Then we have, obviously Canadian GDP. So, you guys have any thoughts on Canadian GDP? We will be looking at it live here as it comes out in a few minutes.
Great look with preparing people for both sides of the market, Blake.
Thanks. Yeah, I mean, it's, obviously a breakdown is a breakdown.
Yeah.
It's a reversal there. We should probably see,
I didn't see that picture. So I'm sure there's others that did not see that picture. So, I just had the upper line where he had a little throw over, but that's, I think that's what's great about what we put out here is it's actionable. It's not just blather about stuff.
That's right. I mean, you're here and to have ideas, like things like you can do moving forward, not like backward looking, like a weatherman.
Or how about this? The market could go up unless it starts coming down first, but if it reverses, it could go back up again. How's that analysis?
There you go.
Trade that.
There you go. Yeah, I mean,
guys.
I think this is a nice little, setup going into today. Speaking of, you were talking about Euro crosses, and I want to go into the end of month, because what Kman was saying a little bit earlier, that maybe it's some end of month flows. We'll have to see. The Euro sterling, I mean, this is one that, we finally broke this 50% retracement. It's a big resistance zone. And I haven't given the Euro sterling much attention recently, but we built this nice little bullish wedge. We're trying to break out today. We hit the 127% extension of that wedge this morning and rejected it. But it looks like these Euro crosses are on the move. Look at the Euro Canadian. Look at that thing. I mean, that's a breakout right there. I mean, that's big. So what do we have any estimates for these end of month flows here today?
Very, very, very messy.
It's mixed, right?
Yeah, the models, I haven't seen much in it, and I've read bank research, and they are contradictory at best. So it's very messy, but what we have seen definitely in the last 3 or 4 sessions, the European morning, euro has been bought, and to a certain extent, sterling as well, but in the background, and really those two, but especially the euro has been bought versus everything the last 3, 4 sessions. So I'd say trade with the clock in your hand and see what happens later on today. I'm not saying it will, but the bid may all of a sudden disappear. That's a possibility.
Got
But
it.
if you look at the real end of models, they are very, very messy.
Very, very choppy. Yeah. Hey, we've got Canadian GDP, and we have employment cost index, the ECI, which is obviously very important to the Fed right now. But before we do that, I know Bank of England is meeting on Thursday, and it's going to be the vote count that's probably going to be the market mover, I would assume. But take a look at the sterling here, and I hope Michael Brown's listening to this. I can call it the sterling, the cable, the pound. What I'm joking, Brian. A little inside joke. Anyway, we've got this descending trend line. We hit the 618 today at 122.02. You can see where it turns bullish. What do you think about price action in the sterling here?
It's just following the euro at the moment. You can tell the difference,
extent, right?
Yeah, you can tell the difference in because euro sterling's moving higher. Usually, it's cable moving faster than euro dollar,
Right.
whether it's going up or down. You know that volatility that we get. But yeah, I mean, cable. It's got the BOE obviously in the front and centre. Also, the Fed as well tomorrow. So the pound's going to be important. We get the new VP or Vice Governor Breeden talking. It's her first meeting, so we get to see what her vote is. The vote's expected 6-3 for unchanged versus the previous 5-4 for unchanged. So we need to see what side she comes down on, whether she comes down on the hawkish side. And
yeah, how about a 7-2, or and then people start like throwing out idea of any more rate hikes, right?
Yeah, it's going to be, the votes is going to be more important than the decision unless they actually do something on rates.
Right.
And I don't think it will go 7-2 because that will send too dovish a message. The 5-4 was a message that we're on pause, but it's a close thing. I think the risk is that they go 5-4 again rather than the 6-3 expected, just to keep that message there that they're not taking another rate hike off the table.
Do you think that's really talked about? Like, listen, you guys all vote hawkish. You guys all vote like, vote to stay, and they talk about it before they release everything. So to make sure that the messaging is right. Do you think they actually do that?
Yeah, of course they do. That's what they, that's their forward guidance. I don't think they
all
votes out the hat.
fixed. It's all fixed. Hey, guys. Thank you, Ryan. By the way, Canadian. You can see the strength coming into the Canadian dollar just ahead of the data. So we should get a strong GDP number. I'm joking. I do believe that Canadian data gets leaked quite a bit. So I tend to be a conspiracy theorist when it comes to Canadian data and release, because I've had some of my bank trading friends tell me that it does release pretty early for a lot of people. So anyway, that's my skepticism setting in. We do have this data coming out in just a second. And we have ECI. So let me just pull up two things. Let me grab the data flash from ForexAnalytix. So grabbing that, moving that aside. We're going to do a little, I'm going to do, 3 windows here. I got the dollar Canadian over here. We got, I think we can follow yields. I think yields is fine. Actually, you know what? I'd like to see how the dollar yen responds today, since we've had this, BOJ, and we see the dollar yen is threatening breakout. Then we have S&P right in the middle. Remember, we have ECI coming out, and wait, ECI comes out. I thought it was coming out. It is coming out at the same time, but it's not on my data flash. So if you guys can scream it out, that'd be great. If you see it. We have 10 seconds. Here we go. Canadian data to the left, or dollar CAD to the left, rather. Let's see here.
Flat, Canada. Cost index 0.1 above.
So a little bit, and look, flat Canadian data. So the dollar CAD is moving up a little bit. So maybe it wasn't leaked. It wasn't. All right. So we have the S&Ps ticking down a little bit. Dollar yen's ticking up a little. How's that? How are yields looking here? Yields are popping a little bit on the 10-year.
Yeah.
So, overall, some decent. Well, I'm gonna say decent. We have really not a whole lot of movement going on. What are you guys thinking here?
It's a solid enough raise in the quarterly numbers. Costs beating expectations 1.1. We're expected at 1. Wages 1.2 versus prior 1.0. So it's higher.
It is.
It feeds into the narrative, doesn't it? Wages aren't going down. Jobs market's okay. Costs are still there.
It is sure not going to make the Fed's job any easier as we go into
they have an easy job. They don't get stopped out.
They're the leaders of the free world, Dale. Come on.
It's an easy job.
Hey, I want to say I want to say Kman, Ryan, you guys are rock stars. Got to listen to you this morning. If you are in North America and you get up in the a couple during your normal hours, maybe a little earlier, just to catch the flow show, because remember it's a flea show, not Linus, not Pigpen. It's a free show that we have during the European hours. It's really nice to be able to listen to you guys then. Kman, I know you were up at ridiculous hours last night covering the BOJ in the ForexAnalytix community. So thank you for that. And it's nice having you there. Yeah, okay. Nice having you there. So anyway, I'm gonna pass it over. You guys make sure you stick around. You got David Keller, really great technician coming up. So
I am nominating David today officially on FinTwit to be our next Fed chairman.
There we go.
Keller, what do you think?
I do not accept that invitation, but
I'm going to get the campaign going today, Dave.
That's it. I'm supporting, completely supporting.
That was a very short campaign for Fed chairman. Anyway, it's a record. So how you doing, David? Great to talk to you again.
Good to see you, Dale. Good to hear from everyone.
Yeah, so key question, we've had that sell-off, 10, 12%. S&Ps, that would be the strangest bottom I've seen in a long time. If Friday was it, where you just close bad and turn up and everything's okay again. But there are some people that think that was it. What camp do you fall into?
Well, and right, isn't that the expectation that you get from the market, right? You sort of get this amazing optimism that comes on an uptick, I'm finding. And that, to me, that is a very kind of bearish kind of characteristic, right? Bear market rallies, I always say, are sudden, severe, and seductive. And it is, sharp. At the beginning of one of those bounces, it feels really tempting to get into it. But at the end of the day, when I think about how you actually track a market bottom from a technical perspective, you usually get kind of 3 parts to it. And I think we're all kind of trying to skip to that last part, which is it already bottomed, right? We're sort of like, okay, that was the bottom. Like we want to keep declaring it. And what you have to remember, I think there are usually some good leading indicators that we haven't had yet. The most common one would be divergences, like some sort of divergences, some things making new lows and other things aren't. And I would say the S&P chart looks pretty familiar because semiconductors look like this. A lot of leading, growth names kind of look like this. And there are outliers that are bouncing higher on earnings, but the average stock is struggling here. And so I think you really haven't had that, and you haven't had a capitulation, right? I think the way that we traded Thursday, Friday, that's not a capitulation low, in my opinion. You're looking for, a candle pattern, like a hammer candle or a bullish engulfing pattern or something that shows, a rotation from, you know, distribution to accumulation. So I think premature to consider this sort of any sort of bounce this week as anything but the latest move within this downtrend channel we've been experiencing for the last couple months.
And certainly a 23 VIX is not capitulation. That was the high of the move in the VIX. I would think that we would need it in the 30s to really have some kind of capitulation in the market.
Yeah, and again, I mean, Dale, market history is full of things that just happen and they're inexplicable. But on in general, you want to track the historical market rhythms, and what happens is usually a push above 20 is the beginning of this, you know, higher volatility environment, and that's what major lows usually play out, is when the VIX gets well above 20, up in the upper 20s, even up in the 30s. That's what we had back in 2022, of course. You know, again,
in March when the S&P was 3,800, we were a little bit above it, right? 31.
That's exactly right. That's exactly right. So I think, yeah, I think this is the beginning of higher volatility. And what's so interesting is 2023 in a pre-election year usually would mean we get some strength into the fourth quarter. The average year, November, December, tend to be pretty strong, but you don't have to go that far back. I mean, if you go to, let's see, like a weekly chart of the S&P and go back to, go back to like 2018. There are plenty of exceptions, right? In 2018, we actually topped out in September. We actually bottomed out in mid-December. We did have a bit of a Santa Claus rally in the last, you know, week or two of the year, but it was really a declining market. Now, the average fourth quarter looks kind of like 2019 or 2020 or 2021, where you have that strength into the end of the year. But it's not unusual to have a pretty good, you know, to have a rough fourth quarter. 2018 may be an interesting analog to what we're experiencing here.
That's where Kramer did his rant when Powell raised rates and then sang Kumbaya. With Yellen and Bernanke. They were all around the campfire.
That's right.
You shouldn't do that. So semiconductors have been some of the weakness here, David, in the group. The oils, people have been hiding in oils. We'll go to oils afterwards, but we're right there at a major moving average.
So, and again, I think semiconductors are actually at a really interesting point right now, because you are actually getting a bit of a divergence here with we're looking at the SMH here. But if you look at a lot of the major semiconductor names, you'll find kind of similar patterns to this. You know, in a lot of ways, this has been an incredibly orderly decline from the high at the end of July, lower highs in August and October, lower highs August, September, and now once again October. But now we're starting to hit a significant support level. And so, you know, and again, it's like what I would be amazed if there wasn't some sort of bounce off of here. Like you usually would assume that there's some sort of bounce. It's not whether we get a bounce, which I think is probably going to happen. It's what happens afterwards. And I would be eyeing this 50-day moving average to see if we can hold above there. And if so, that sort of tells you maybe something is changing. But more often than not, this would be a brief bounce, and it's all about what happens right after that sort of bounce there. So I think semiconductors are important. The other thing I would point out, Dale, is with a lot of these charts, RSI at the bottom is a really good way to just kind of think about what's happening with the price, sort of like looking underneath the hood of the price action. And what you have to remember is in a bullish phase, the whole range of the RSI moves up. So here in like late 22, mid 23, the RSI doesn't really get below 40 on pullbacks and often gets overbought on these rallies. And the opposite is happening now, right? The conditions are more weak. So on these bear market rallies, the RSI stalls out above 60. So when we do get a bounce, which we will at some point, that's kind of where my eye immediately goes down to see if we're able to get above 60. And if so, that means usually enough buyers are coming in, this could be more sustainable. But if it stalls out where it did in October and late August, that's usually a really good sign that the bear market sort of progression is continuing and that we're just setting up for another leg lower.
Okay. Do you think that the market is handling the geo risk pretty good, and or actually, you know, it's been going on for 3 weeks. Until last week, we really didn't have any real sharp declines. That was a pretty negative week. I think they're whistling past the graveyard with what's going on in the Middle East, and that, we may not have seen this kind of geo risk in 50 years, like the
So
70s.
it's so interesting because I think you're right, Dale, in a lot of ways. And I would argue that newer investors, right, novice investors, and certainly in the last 5 years, we've had an influx of new market participants. Any younger investor, right, any sort of Gen Z investor, you really haven't experienced a lot of these things before. And and it's other things. It's a rising rate environment. It's a Fed getting to the end of a rate hike cycle. And if you have experienced them, you haven't experienced a lot of them very recently. So this is probably out of your recent memory. And I think for a lot of investors, they're still sort of in that, sort of the recent way of thinking, which was the market recovers, growth stocks lead out, semiconductors are a good place, the mega cap names lead, and that's just kind of how things go when we get pulled up again. These are really extenuating circumstances, and conflict in the Middle East to the scale that could happen. I mean, it would certainly be a rarity to get, if it escalates a little bit further than this. And a full-scale conflict, usually has severe impact on oil prices. Higher oil prices tend to have significant impact to a lot of other things that you would expect, like energy stocks, but things that you probably wouldn't as much, like consumer, products and travel and tourism and things like that. So it's hard to predict what geopolitical events, how they will unfold, but given what I'm seeing, I would say there's an elevated risk of oil prices accelerating to the upside because
the
of
shares
the
are not acting that way, David. I mean, look at them sitting right here on the 200-day.
No, and I
anyone
think
who bought them 3 weeks ago is underwater big time if they bought them just because hostilities, because of the massacre, if they bought oil shares.
That's right. And I think what's happening is the market is under appreciating or undervaluing the possibility of that occurring. We're leaning away from that sort of doomsday scenario where things kind of accelerate. But I would argue, again, as an investor, it's not just about being right, although that would be great if that was our goal, and it's good to be right. But it's also not being wrong, and it's also measuring those risks of the thesis being incorrect. And I think if you're if you're assuming that oil prices remain very stable, you're minimizing that risk of a big spike. Energy stocks for now really haven't materialized. There's this incredible basing pattern. We're still kind of at the upper end of this basing pattern and never really broke out. We've had these numerous pullbacks to the 200-day moving average. But I mean, again, I'm still bullish on the energy space relative to others.
I can't short crude with the overnight. I mean, everyone I talk to, David, is sanguine. Oil people like Anas, and they're saying nope. There'll be no embargo. The Straits of Hormuz will remain open. How do they know the Straits of Hormuz are going to stay open?
Right.
I don't know. I think that the U.S. government doesn't know, and that's why there's a few carriers over there. So I think really the flashpoint would be if another front opened up with Hezbollah, because they're more of a direct client of Iran. So if that happens, they were probably waiting for the IDF to get bogged down in Gaza, but they're not fighting the war that way. So that's what I'm keeping an eye on. And
I also think, Dale, it's also about the scope of it, right? So I mean, if there were other actors that were pulled in, like you mentioned, from other,
regional,
if it becomes more of a regional conflict, then there's a risk of it becoming the next level, right? There's always that risk that it accelerates to another level. So then all of a sudden, if more participants are in there, if it's multiple fronts, if it's a larger scale, then there's all of a sudden the risk of another, what's the next level above that, and what would those implications be? And that's when there can be dramatic effects on global economy. Still, now it's very limited. I think the market is pricing in a limited sort of ripple effect to this. But again, it's a risk that I would not be unfamiliar with if I'm investing right now.
Yeah, so I mean, compared to the war in Ukraine, so we're getting away from the charts a little bit. It's a more flammable situation than the 2-year war with Ukraine and Russia, because it could bring in more players right away. And that is really, I know Russia's an oil producer, but that is really the lifeblood, the Middle East, Strait of Hormuz for Western democracies, even though they want to go green. they, you know, that choking off the Strait of Hormuz would be, I've heard people say $200-300 a barrel. That happens.
Yeah, if you think about the upside potential, and again, it's a significant amount. And again, is that a high likelihood? I would say at this point, no, but is it a likelihood that you want to think through? Definitely.
Yeah. So gold really rallied strong, but you know, except for a few of the miners, Dave, you know, I haven't felt like I missed that much. How do they look to you?
No, and it's interesting that, you know, and you usually assume it's kind of like with oil and oil producers or gold and gold stocks, you assume that those are pretty highly correlated, which they often are, right? It makes sense that, you know, Newmont Mining is going to do better with higher gold prices. This is one of those times where it's really not the case. So gold really accelerated in October. You know, you look at the GDX and, you know, from a technical perspective, two completely different charts, right? This, you know, the GDX gold miners, you know, sort of languishing below $30. And we've kind of been highlighting this level here. It's just
that might be a neckline, bro.
Very much so, right? Very much so.
And then we is it the right shoulder?
Yeah, it's not a textbook perfect head and shoulders bottom, but it's close enough that I can see 30 as a pretty meaningful resistance level. You compare that to the GLD, which just blew right through, you know, moving averages and went up. I would speculate that short covering was a big part of this. I think a lot of investors got caught on the wrong side of this and just had to cover in here. But you know, gold out of the commodity space, we have oil languishing. Gold isn't too bad of a place to be. You know, right now overbought. So you know, expecting and just came out of that yesterday. So wouldn't be surprised if there's a bit of a pullback after the run that we saw in gold. But overall, I'm looking at the 200-day moving average. I think holding that could be pretty meaningful, given the risks that we just talked about in the previous little segment. That's why I think gold is a pretty decent opportunity here, just to diversify away from other areas.
Are the bond bears about to have a haircut? TLT?
Yeah, so bonds are a really interesting one. If you look at the TLT, if you look at the ag, it's giving all the signs of bottoming. I mentioned like earlier with the S&P 500, you've not really seen any divergences, right? Any sign that the market's moving lower, but the momentum is starting to change. You actually are getting that on the TLT and ag. So lower lows in October, higher lows in momentum. We were oversold in early October, not oversold in late October. And, you know, again, that usually indicates the exhaustion point of the trend. And you often get bearish divergences at the end of a bullish run. So I wouldn't be surprised if we get a bit of a counter trend move here, a bounce higher in bonds and a bit of a pullback in rates. The 10-year yield's kind of getting up to that 5% level, never really pushing above there and sustaining above there. I think eventually we do get above there, but for now, it seems like there's a bit of a mean reversion to happen. So I would be in the short term. I'm more of a buyer of bonds, betting on a bit of a mean reversion upwards.
Yeah, there could be, I see two drives. There could be one more shot down, but that would be your second major divergence. It'd be pretty glad.
That's right. That's right.
A new low. So I'm actually scaling into an ETF. I think it's TM something or it's a triple ETF.
Yeah. I don't have a problem with that as a short-term play. I think that's a decent approach, Dale. I like that.
Yeah. Anyway, I'd like to get your view on the dollar. You know, these two are pretty correlated. You know, we've had a great run in the dollar. Is this just consolidation?
It is, yeah. So pretty impressive run right from mid-July to, you know, really early October. From there, it's really, I mean, October was really kind of a yawn for the dollar, sort of consolidating. And this is pretty common, right? From a technical perspective, you usually have an impulse move and then some sort of corrective move, right? Some sort of consolidation or a brief pullback. But you have to remember that markets can correct in one of two ways, right? In price or in time. So if you look back at like 2022, you have these price corrections, right? Which is a big run and then a brief pullback. Here in March of 2022, it looks very similar to what we're seeing now, which is more of a time correction, right? It's more of a run and then we consolidate. And I think the signal you're waiting for and the signal I'm waiting for is this right here, right? Early April of 2022, you had this sort of rectangle, you know, coil pattern, you'd probably call it. And then a breakout above that, you know, sort of indicated that next leg higher. That's what I'd be looking for here. So I think 107 is the trigger I would be looking for. That's where I have an alert set and a break above there. think continues the way higher.
Okay. You know, I was watching a sector, unfortunately, just watching it. But, you know, with general market weakness we've had, they are pulling back. And you think about things like energy and even the underlying uranium price. We've had a pretty good run in uranium issues. I'm wondering if you think those thoughts are correct and would be buying pullbacks if you have anything in uranium that you follow.
Yeah, let's do
So
probably
it's
just bring up
kind of a
URA.
sleeper for a while, but yeah, okay, Cameco, yeah, okay. Well, it looks like we're in a pullback, might in a pullback phase, but
It is, yeah.
yeah,
So uranium, I was going to say uranium really good in September. They kind of pulled. This is
yeah,
URA, one of the uranium ETFs. So I'm
yeah,
using
okay,
here for simplicity.
that's good.
If you look, what I like about this chart, and again, what's interesting about this chart, I'll tell you why the technicals are pretty attractive here, but then the real reason why it's attractive at the end. So the technical
Okay,
reasons are you've pulled back, right? You made a new swing high, and then you pull back. You're pulling back to an ascending 50-day moving average. Remember what we talked about with the momentum on the S&P and how the momentum was kind of in that bearish phase, you know, not really getting above 60 on a rally, getting way
yeah,
below 40 on a pullback. You have the opposite here, right? So you're becoming overbought on the rally. We pull back and the RSI remains above 40. So this is really kind of a classic bullish setup. You know, it's a pullback within an uptrend. But I think so. So that's why I think this is setting up as a pretty good entry point. I think this is a decent play. The reason why I think it's really attractive, though, is when you look at it relative to other things, right? The relative strength of uranium is still quite strong here over the last 3 months because so
right,
many other areas of the equity space are struggling. So,
yeah,
you know, an okay chart in equity world, when the S&P and the NASDAQ are doing what they're doing, an okay chart is actually really good on a relative basis. So I think as a relative play, something like uranium, you know, other sectors, things like energy is why energy is still
yeah,
okay, even though it's not going higher. It's just not going down when a lot of other things are. So as an equity investor, relative strength and leaning into what's working, relatively speaking, is usually a really, really, really sound approach. That's why I think uranium is an interesting play here.
okay. Anything you want to wrap it with, Dave?
Yeah, I mean, Dale,
I
it's
haven't
always a
asked you
pleasure.
anything.
I think the biggest one I would say would be breadth conditions. So
Okay,
the breadth conditions, which is really looking at you know, the strength of the market. And again, you kind of call it looking underneath the hood of the market, right? You're looking
right,
at the stocks that comprise the major indexes. And a couple quick takes on breadth. I mean, one would be percent of stocks above key moving averages. We're down to around 28% of the S&P members that are above their 200-day moving average. We know the S&P, of course, broke down about a week ago through its 200-day. Most stocks, right? I mean, 7 out of every 10 in the S&P are also below their 200-day. Down to the teens, right? 14% of S&P names above their 50-day. So these are, you know, levels that you usually see more in a distribution phase. If you look back in 2022, you can see when we're getting down to like single digits of stocks above their 50-day moving average. That's when it's like everything seems to be going down. We're kind of
yeah,
almost there. This is the long-term gauge that I would look at. And when, you know, when we're talking about whether the S&P is still in a downtrend and what you'd need to see to change that, an indicator like this getting back above 50% would tell you there's enough of an upswing on the individual stocks in the S&P that could propel the S&P itself to go higher. So the breadth conditions, whether I'm looking at that, something like the McClellan oscillator, if you're more short-term oriented, which I know a lot of the viewers today are, the McClellan oscillator, one chart I'm going to show you I would watch would be this. The McClellan oscillator is based on daily advanced decline data, and it's simply looking at whether those breadth conditions in the short term are more bullish or bearish. And I've color-coded in red when the indicator is below zero, color-coded in green when it's above zero. And if you look at the S&P in the bottom, you can see it actually tracks pretty well. You know, the oscillator being above zero is really just the breadth data is improving and the market is able to go higher because stocks are going higher. When it's shaded red, which it is now, that basically means we're in a distribution phase. The breadth conditions are negative. So looking for this to go back above zero could happen as early as today if you get a nice rally. But that's an indicator I would be looking at as a short-term sign of a good mean reversion move to the upside. You can see that in late August and mid-October, we got those signals. So looking for something similar here.
I think everyone has to go back and listen to this interview again because it is chocked full of technical wisdom and things that you could put in your arsenal to attack the markets with. So yeah, David, you know, I learned some things today, and I think people need to follow your work, yeah, and your demeanor because you know, there's no emotion. You're talking the numbers. Your presentation's great, and your ideas are excellent. So, I know they could find you on Twitter at dkellercmt, but I'd like them to tune into your shows. Why don't you tell them where they could see your videos?
No, thanks so much, Dale. Listen, always a pleasure. I appreciate so much what you guys do. You do such a good job fostering a community of aware traders and investors. I appreciate that very much. Yeah, at stockcharts.com, if you click on Stock Charts TV at the top, you can get to our live broadcast. We broadcast live on YouTube every day, right at the close at 4 p.m. Eastern. My show is called The Final Bar. We recap the day, similar sort of approach to what we just did here with Dale, and sort of recap the technical implications of what we're seeing in this sort of environment. I think it's vital to have a good disciplined process of technical analysis. Just helps you make sense of these markets in uncertain
Look
times.
at the guests he has too. Maybe you could ask Larry if he'd grant me an interview.
I'll see what I can do.
All
But
right,
no,
I mean,
the great
huh?
Dale Pinkert has even come on my show before. I remember.
Oh yeah, it hasn't been a while, so it tells me what my performance was like. But anyway, David, and I love the title of your show. It's so apocalyptic, The Final Bar.
The Final Bar, right?
That's where I'm going to be when I see some mushroom clouds at your place at The Final Bar, Dave.
There
Really,
we go.
thanks so much for giving us some clarity with your elite analysis, bro. Really.
No, it's a pleasure. Pleasure, Dale. Take care, everybody.
Yeah, and good hunting this fall. We'll get back together in the winter.
Sounds good.
All right. Dave Keller, everybody, at dkellercmt on X, and go check him out on stockcharts.com. It's valuable. And that's going to be a wrap for me and you. And the team will be available in 18 minutes on the Morning Edge. Good hunting on Turnaround Tuesday. And remember, whatever is happening, don't just count your pips, count your blessings. It is impossible to be grateful and unhappy simultaneously. Okay, see you, John. Thank you, everyone. Greg, you're welcome. Adios, Warriors. You too, Jean.